Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden gears of corporate finance and sometimes even find a few surprise widgets. Today we're diving deep into a filing from Functional Brands Incorporated, a company that recently went public and is already making some interesting moves. Get ready because this report about their stock and new investment deals is a real page turner. And hey, before we get too deep, if you love getting these corporate insights without the boring jargon, make sure you are subscribed, and the link to our Discord community where we chat about these finds is in the description below. So what is the big news from Functional Brands Incorporated? Well, they've been busy setting up a new deal involving preferred stock and then a public offering. It is a bit complex, but at its heart, it's about raising money and getting their stock out there. Let's break down a key part of their recent financings. Around late July, they agreed to sell some special types of stock called Series A Convertible Preferred Stock and Series B Convertible Preferred Stock to certain investors. Think of preferred stock as a special share that often comes with certain promises like getting paid back first or having conversion rights. They agreed to sell 100,000 shares of this series of stock with a stated value of $10 million, but they actually got $8 million for it before fees. On top of that, they threw in 80,000 shares of Series B preferred stock as a bonus with a stated value of $8 million. Then on the 5th of November, they officially closed this deal, meaning the money changed hands and the stock was issued. Right after wrapping up that private deal on the 5th of November, Functional Brands also had a major milestone. They completed their direct listing on the Nasdaq stock market. This is where their common stock started being traded publicly. Now here's where things get interesting with that series of preferred stock. About 45 days after they went public, these investors can convert their preferred shares into regular common stock. But the price they get is a bit of a game. It is set at the lowest of a few options. One is a valuation cap of $56 million. Another is 75% of the common stock's price on the day they listed. They can also convert at the closing price the day before they actually convert, or at a 25% discount to a 5-day average price. There is also a minimum conversion price of $4 per S-share. This structure is designed to protect investors if the stock price really takes off, but also gives them a good deal if the stock is trading lower when they decide to convert. The Series B preferred stock has its own conversion rules. It can be converted into common stock anytime at a price that is the lower of the closing price, the day before conversion, or the same valuation cap of $56 million. So these are essentially locked into that valuation if they convert. The Series of Preferred also comes with a dividend, and this dividend isn't just a flat rate. For the first 6 months, it is 5% annually. Then for the next 6 months, it jumps to 10% annually. For month 13 through 18, it is 15% annually. And after that, it is an extra 3% per month. This increasing dividend structure incentivizes the company to either convert or redeem this stock relatively quickly. And get this, the dividend can even be paid in common stock if the investor chooses. That could dilute existing shareholders if the company needs to issue a lot of stock to pay these dividends. Now for the Series B preferred stock, if the company decides to raise more money in the future, the holders of this Series B stock can actually ask the company to use up to 25% of that new money to pay them back in cash for any of their unconverted Series B shares. The company has to offer this opportunity very fast, and the investors only have a day to respond. This is a significant way for Series B holders to get some of their money back, especially if the company isn't performing as well as they hoped, or if they have a better opportunity elsewhere. To make all this official, on the 9th of October, they officially filed the paperwork to establish the specific rights and rules for both the Series A and Series B preferred stock. This is a crucial step in making these new share classes legally recognized. And to top it all off, this report lists all the exhibits that give us the full details. We're looking at the actual legal documents that define these preferred shares, like the certificate of designation for the Series A and Series B preferred stock. These are important because they lay out all the nitty-gritty details that we've been discussing. There are also forms for the Securities Purchase Agreement and its amendment, which are essentially the contracts for those private placement deals. So what is my take on all of this? Functional Brands Inc. is clearly in a growth and fundraising phase. The use of convertible preferred stock shows they're trying to attract investors with promising terms for both the company and the investors. The increasing dividend on Series A is a clock ticking for the company to either grow fast enough to make those payments manageable or convert it before it becomes a huge burden. The redemption option for Series B stock is a good safety net for those investors, but could strain cash flow if the company needs to raise more capital down the line. Their recent direct listing on Nasdaq is a big step towards public visibility, but the real test will be how their common stock performs and how they can manage these complex financial instruments. The company's direction seems set on rapid expansion financed by these deals. The biggest risk is whether the company's actual business performance can live up to the valuation and the obligations tied to these preferred shares. If demand for their products or services doesn't grow as expected, they could be looking at significant dilution or cash flow problems. Alright, that is our breakdown of Functional Brands Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.